Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. It is after the close on the 10th of April 2012, and we're going to look at the charts. But first, I got to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts, but let's do it. Okay, looking at a 30-minute chart, if there's any doubt that this was a top, it was certainly removed. Well, actually, it was removed yesterday, okay? But now we're really looking at a significant day down about 1.7% roughly. The Russell really got crushed, which is kind of typical, and everything down across the board. And I just want to take a look at this and show you that our target from the height of this pattern was 1368, and that was exceeded today. Now, I want to also show you that our little bear flag that we discussed yesterday, by that I forgot to put my typical bear flag light blue on there. That's a color that I use for all flag patterns. Just want to show you that flag pattern played out nearly perfectly. The only thing that was a little different about this is instead of us getting the instead of this flag flying at half mast, it looks like this flag was flying at about 40% mast. So in other words, we got more downside today than what I was expecting. Now that doesn't mean I'm surprised by it. It's just that we were expecting maybe to find a bounce here at this 1368 level, or even a little bit higher in the low 1370s. But clearly, this market wanted to sell off more than that. But I feel very good about our anticipation of the last 2 days, because as you recall, we were looking at this neckline on this I'm going to call this a triple top here in this in the S&P, when we kept hammering down on that neckline, camping out in that area. It's as if to say, we just can't quite get enough steam to get up over back into the pattern, near the top of the pattern. We just don't have the strength to do it. And like I said, in the other times, someone's at the door. But anyway, at the other times when we touched on this line, it was met with a quick rebound. And this time, as a matter of fact, you could even look at these two rebounds right here. We did look at this one as a small inverse head and shoulders, and we could look at this one as a small inverse head and shoulders too. So let's do that. This is a kind of an interesting little exercise. So we come down, make a little inverse head and shoulders, come up, make a really small inverse head and shoulders, come up, and then what do we make here? Well, we make more of a standard head and shoulders. So this really kind of serves as a continuation of this downward move. Now, looking at a 10-minute chart, I have identified what, to my eyes, looks to be a descending, a descending channel. And something interesting happened today. And I don't want to make too much out of it, but I want you to consider it. And you know what I'm going to say. If you're looking at this move today actually came underneath this descending channel that if we go back to the top of it, goes back 1, 2, 3, 4, wait a minute, let's include this day, 1, 2, 3, 4, 5, 6 days in this channel. Today came down underneath this support line. Now, when you see this kind of action in a rising channel, you get sometimes where just turn this upside down, okay? We're coming up in between two channel lines. Then all of a sudden you get this move that goes over the top of that channel. Oftentimes that signifies a blow-off top. That is the last bit of irrational exuberance, if you will, that signals, Joe Retail just went all in. And you know what that usually means. Well, we came down and broke the underside of this channel. I'm not going to say at this point that that means this is the bottom. But I will say this, and we know this anyway, that when you break a descending channel's support line, you cannot count on this line now to serve as resistance. In other words, we expect this line to be support, and it was on 2 occasions. But since that broke today, because of the slope of this line, it would be nothing for the S&P to rally back and to get back into this channel. Okay? It's like it broke to the downside, but you cannot count on that now to be resistance. You can pretty much figure that if the market shows any strength, it'll just come right up over the top of that line. And I'm kind of thinking we may get that. So let's see what happens tomorrow. I don't see enough yet to call a bottom, but I see what looks to be maybe a little bit of capitulation with this move underneath this line right here. So I'm just kind of marking that in my own head. By the way, I had a long-standing order. Well, I say long-standing. I'd had this order for more than 3 weeks in Caterpillar, and I got filled today near the bottom of its trading range. And so that, I think that's probably a good stock to own anyway, and at these levels I think it might do okay. Excuse me. So basically we are not ready to quite make a call on any kind of bottom pattern, but we can say for sure that the minimum expected target from this triple top has been met, and then some. Looking at a little bit longer range chart, I was saying, looking at a longer range chart, we have 2 lines where we would expect to find possibly some support. One is this purple line right here, which is in the 1340s. And then the other one is this blue line, which is the line drawn across the 2007 and 2011 tops. That would be in the 1320s. So wow, what a difference just a couple of days makes, huh? We were up here in the 1420 area, and people were thinking, man, this thing's just going to keep on going on. But we thankfully saw this topping pattern, and when we combine that with what we identified over the weekend in the S&P, I believe it's the June futures contract, that was a head and shoulders in that chart. So let's just keep an eye on it tomorrow, see if we get a bounce, perhaps right away, or at this line, which is about 14 points underneath us, or that other blue line that is currently about 35 points below us. Anything could happen. And wow, I'm just glad that we recognize this top here. And now the goal is, let's try to recognize where we're going to get a bounce. So look, hey, thanks for watching the video. I want to thank my longtime subscribers and newer subscribers for your support, and I hope you get something out of these. Thanks so much. Take care.